MSTY versus MSTX, when to decide to invest in either. How should you choose? How should you approach this? What are they? How do you use them to make insane returns? Well, let's discuss. MSTY versus MSTX, what are they? How do we compare them? Well, MSTY is issued by yieldmax. It is a covered call strategy. It converts the potential volatility into income by selling call options on your MicroStrategy. What you do is you sell the upside exposure of MicroStrategy for income, and you are fully exposed to any downside in the MicroStrategy underlying share price, but what you get is income. MSTX is a 2x leverage strategy. You are symmetrically exposed to 2x return on MicroStrategy. If MicroStrategy moves up or down 10%, then MSTX should move up or down approximately 20%. And so you want to own this for growth. So what you have is an income product and a growth product. But when should you use them? MSTY is something to own if you believe MicroStrategy isn't going to go up much. You want to be bullish on MicroStrategy, but if you think you're super bullish, your best option is just to own the underlying MicroStrategy. And so you believe that it's going to go up, it's not going to go down, and you're short volatility. So you believe it isn't going to go down much either. You don't want it to go down a lot because you're fully exposed to that downside through its payoff diagram. You'd rather have income than the potential upside of MicroStrategy, right? That's where you are. So you're short MicroStrategy volatility. You believe it's not going to go up a lot, and you don't believe it's going to go down a lot, and you have a slight bullish bias towards the MicroStrategy price. If it's going to go anywhere, you want it to go up slightly. So that's when you want to own MSTY. And MSTX, you believe MicroStrategy is going up, you do not believe MicroStrategy is going down, and you are 100% bullish MicroStrategy, and you want that 2x exposure, and you are 100% bullish. So there are regimes in the MicroStrategy price where you want to own them, and they're broadly identical, but let's explore in detail. So here are the payout diagrams for MSTY and MSTX, and what we can see here on the left is the payout diagram for MSTY. And what it does is it sells the upside exposure for MicroStrategy in exchange for this option premium. So you sell the call, you get this option premium, but you don't get to participate in the upside of MicroStrategy if it goes up. Now, what you do is you get this option premium, but you're fully exposed to the downside of MicroStrategy. If MicroStrategy goes down, so does your P&L, and you find yourself in a loss minus the option premium that you received. And so that is MSTY. Now, MSTX is very different. Here's MicroStrategy going up $1 for $1. If MicroStrategy goes up $1, then you make $1 profit. But if MSTX goes up, if MicroStrategy goes up $1, MSTX makes $2. And so your P&L has like 2x the steepness. The gradient or the slope is twice as steep. You're going to make more money on your P&L on here than you are with the MicroStrategy price. So really, really powerful payout diagram, but you're fully exposed to the downside as well. If MicroStrategy goes down $1, MSTX goes down $2. Not ideal. So you want to be very, very much exposed to this upside. And again, with MSTY, you want it to be exposed when you're generally trending up as well. So what do you have to look out for with these products? Well, MSTY, you're concerned with NAV erosion, and you're holding during MicroStrategy going down will lock in any NAV loss, which is really, really unideal. We've discussed that you're fully exposed to the downside, and there's generally a NAV erosion because when things go down a little bit and you sell that upside potential, you go down and then you don't go up, and then you go down and you don't go up. And so you have to be very, very careful about how you hold MSTY, and you do not want to hold it on the long run. Again, the same with MSTX. What are you worried about? Well, holding when MicroStrategy is going down 100% because you're fully exposed 2x to that downside. And return drift. Now, these leveraged ETFs drift on their return. So on any one day, they will approximately be 2x MicroStrategy or 2x whatever their underlying asset that they are, but they tend to drift over time. And so you don't really also want to hold them long run because they will sort of start doing random things over long run trades. So you need to make sure that you understand that both these products are active trades. They are not buy and hold products. They're not buy and hold investments. So let's look at how we can manage them. All right, so here we have MicroStrategy price on a half-hour chart with MSTY in green and MSTX in the light blue, just like we had in the slides. And we can see that MicroStrategy is down 68%, MSTY is down 80%, and MSTX is down 95% during this time period. So you can see that things have been really, really rough for owning these products in the long run. And this is why I've always been a massive advocate for active management of these investments, because there is a high return potential if you manage them correctly. If you just buy and hold, you're going to get wrecked. Now, if we, for a minute, just ignore MSTY and look at MSTX, we can see that it clearly tracks about 2x leverage for MicroStrategy. And surprisingly, it does quite well either over reasonably long time periods. You can see it really clearly here. We can see when it started, when it was issued. We can put it here when it was issued. We can see that it went up, and it went up approximately twice the amount. So we went up like 260%. We went up 700, 800%. That's amazing. That's even more than 2x. And then we've come down, we've gone down a lot deeper, and things have been pretty rough, right? And so you do not want to hold this through these bear periods because you don't have a means to short it. And so you don't want to own it during this period. So what do? Like I've said before, the MSTY, the MicroStrategy MSTY Winter Rebalancing tool that I've developed is perfect for this. You can see here, this tool will allocate on the bullish periods very, very efficiently, and you will avoid being in it. So if you see it, if it's saying winter, that's indicative of holding cash. You want to be out of MSTX. And when it says MSTY, that's a good sign that you probably want to be in MSTX. So you can see here it went into MSTY, you're up, you want to own there. Here you want to be in cash. Here, you certainly want to be in cash, right? That's a massive drawdown. But during this period and this period, you wanted to be in MSTX. So really, really powerful. And again, here, during this horrible bear market, right, we wanted to be in MSTX, but here we did not absolutely want to be in it, and we would have been held for these little pumps up, which is great, but we would have avoided these massive drawdowns by using this approach. Just like with MSTY, where we can bring that back on now. MSTY, again, here it would have kept you out of these big drawdowns, and you would have been in winter, which you would have generated really good return. You would have been going up during this period instead of down. It's a very, very powerful tool. This is the winter price, the dark blue. And you can see here, like we've gone down in MicroStrategy's price. Winter has generally gone up during this period, and it's kept you in winter, and you have been generating nice dividend income returns while having a price appreciation rather than getting wrecked in MSTY or MSTX. And so these products, like I've said many times and I keep advocating for, are very much actively managed products. You do not want to buy and hold them. They are not. They are trades. They are not investments. And you need to have a framework to trade them in order to participate in them. Because otherwise, if you're on the wrong side of the wrong product, things are very, very painful. But if you can manage it correctly and you can keep your emotions in check and shift in and out of the products, the return potential can be very, very high. So what am I getting back to? Of course, my channel is all about selling my amazing approach to doing this, but this is where I am biased horrendously, but I think the best way, if you want to be actively managing high returns on MicroStrategy or MicroStrategy derivative products, then you need to own a product like this. I'm not saying you should own mine, but if there's a better one on the market, then go use that one. I just don't think there is. So if you're interested in this, then definitely check out my website, mangosteen.global. So I did quickly want to discuss the subtle differences between owning MSTY and MSTX in different market regimes. And what we can see here is during very high periods of bullish activity, owning MSTX is very desirable compared to owning MSTY. And I'm going to show you here now why. So if we look, when we're in a bullish regime, so here we've come up bullish, and we can see that MSTY has sort of gone up slowly because it's been selling that upside as call options, but you've been getting the income, right? You've been getting nice little dividends throughout this period, and MSTX has gone up. And I tell you what, the delta between them is probably not massive, but because you're getting that income that's boosting up the MSTY sort of total return and closing the gap between you and MicroStrategy and MSTX. But when you get into really extreme periods of upwards bullish activity, you just want to own MSTX, right? You can see here MicroStrategy going up, doing really, really well. And we can see MSTY climbing up. You know, it gets exposed to some of that upside, but it's selling a lot of it for call options and generating some dividends. But those dividends are fixed. And what's happening here is MicroStrategy is going up massively, MSTX is going up massively as well. And so during those early periods in the early part of the bull run where you've got very, very high return potential, you are generally going to be better off owning MSTX than owning MSTY. But that is just some of the subtle differences. But the timing and the decisions that you should make around them are broadly the same when this indicator is suggesting a bullish sort of market activity. You want to be in either, but when things are going bonkers, you probably want MSTX. MSTX with the MSTY Winter Rebalancing Tool is absolute degeneracy. You're 2x leverage MicroStrategy. You've got the MSTY and Winter exposure. And if you want, when you're not in MSTX, then you could change into Winter and generate nice income while you're waiting for the opportunity for MSTX to come back. It's absolute degeneracy, very, very high risk, but man, a high potential for gains as well if you do and time it correctly. If you're interested in generating crypto-like returns, then I would say these are the sort of strategies that you should play with. And the beauty of it is that you're doing it off a much more established market than some of those scam crypto coins, shit coins. Who am I? I am Mangosteen. I have an academic background in finance, economics, accounting, and engineering. I have broad experience across corporate strategy and finance, including time as head of investment and treasury for a multi-billion-dollar corporate. And my purpose is to cultivate the next generation of active investors from suits to steel caps through renegade financial education and strategy. If what we've discussed is of interest to you, then Mangosteen Private is for you. You can access it through my website, mangosteen.global. It is currently a 2-year license. So basically the price you're paying at the moment is like a 50% discount on what the final price will be. I also think this price is too cheap. It's currently only about half of what similar offerings are in the market, so it's insanely cheap at the moment compared to other similar offerings. And there is a 14-day no questions asked refund policy. So if you get in, you buy it, and you say, hey, look, I just don't know if this is for me, I'm not sure about this, then you can email me in those first 2 weeks and I will happily give you a refund. So email for details as well, hello@mangosteen.global if you're interested. Cheers. And disclaimer, this channel does not provide financial advice or any advice of any kind. Everything is for general information or entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products are factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.